Welcome to the Commodities, and here we're looking at gold, and the rally in gold here is really moving into overbought territory here, but we do need to see failure in one way or another, and failure could be either seeing 5 waves down on some intraday chart or seeing the 1310 as a resistance. Okay, but it is oversold, and look, yes, it could move higher. That's why we wouldn't really look to short until we had a clear 5-wave structure down. So, yeah, I mean, this, I can't really make heads or tails of this here, but it really hasn't, it hasn't rejected the 1320, and it hasn't sort of let go of it. So, you know, maybe even the 1315 here as a resistance here would be helpful with short positions here. So look, the main point is that definitely moving into oversold territory up here. So we do expect it to roll down. It's just that we need to see a clear 5 waves down on even in a 5-minute chart. But the 1315 as a retested resistance would be part of that process that you could use as a short trade setup, and also the 1310 as well, of course. So the silver market is always a little bit weaker, and if we look at it on a 4-hour chart here, we've seen that the move up through here, kind of labeling it a little bit different because it is different than gold. So labeling it down for 1, back for 2 here, and then all the way down for the 3rd wave. So we'd be looking for a 38.2 retracement level, which we have here at this price here roughly. And, you know, this particular move up through here doesn't appear to be impulsive like 5 waves. It's more like an overlapping corrective structure all through here. So we'd be looking for weakness, and one of the weakness points that we'd be looking for was simply the 2000 to become the retested resistance, and then selling new lows. So you could probably sell a daily new low in this point here, and would be looking for a move below the 1950 area through here. So it's something to look forward to here. So perhaps have a look on the daily chart, find the low in through here. It's probably this one here anyway. So, you know, shorting the 1990, so 1989 or something low there would be the go, and putting the stop above this high here. The copper market is still above the 300, so we still have to consider it being positive. It's just not looking that positive. It was looking positive to the point that we had a 5-wave structure here and a 3-wave move back, and that means we would be looking for a high above this area here. In fact, we were looking for a high above this area through here as well because of this ABC pullback, and the same as this one here. And we've got that now. It's just that we don't have a very good looking impulse wave to the upside here. This from this low here, all of this here is looking a little bit sort of corrective, even though it's up here. So yeah, look, there's weakness there. It's not showing a very positive impulse wave to the upside, but of course we can't turn bearish until we've got the 300 as a retested resistance. We could probably do it at the 302 here, being retested resistance as well. So just a little bit early days just yet. So there's still potential to the upside, but it's not looking good. That's all I can say at that point there. Right, the oil market, the energy section. Look, in a bit of a nutshell, it's probably going to catch up with stock, and stock has been moving lower. And also too, we expect the US dollar to bounce. If I can just have a quick look at that now, because obviously it's going to affect other commodities as well. So we can count I haven't got a label on this chart, but on the FX we're counting 5 waves down through to here, and that counts quite nicely to here. So we were looking for a retest of supply back into here, closer to the 80 before we see any sort of further downside here. The little move up through here is not showing us a strong move to the upside. It's a corrective move here. Sure, there can be more corrective. So we can consider it strong, long as it stays above the closest largest number, which would be the midpoint, the 79.50. So just keep an eye on that, because that does move up through there. Then obviously it's going to place pressure on all the commodities, including the energy sector here as well. So, but I wouldn't call this bearish until the 102 here became the retested resistance here. So while it's above that, then I'd consider this market supported, and the move currently across the top of group 1 here, the 103 is always group 1, and it's just doing its dance across there, and it could certainly, it does appear that this is impulsive here, so we would see a move down, back up, and down here again. So a bit of a pullback, if you will. But after this pullback here, as long as that 102 remains as support, then it's got a reasonable opportunity to find support back after here. But we would need to see this as 3 waves here, and if that's the case, then we'll look for support, and then we'll look for higher ground here. And of course, if the 102 becomes the resistance, then we'll look lower from that point there. Just having a look at Brent on the side there. Brent's got pretty much the same pattern as well, so not a lot to be sort of said and done. So basically just waiting for this correction to unfold here. The gas market's pretty much the same as well. Just on the 1 hour chart, the move up through here, it can be counted as, we know there's really good support at the 420, okay, but what we're looking for is a developing 5-wave structure to the upside, and we don't really have that yet. I know that it's possible that we'll get it, because we've got from this B wave or wave 2 here, we've got a long extended wave 3 here, which can also be called wave C, but we need to call them both at this stage here. But it's likely to be the 3rd wave, so we're likely to see further upside here. We have a position just above the 450 there. We can move the stop up to break even, and let's just see what sort of develops from that point. But if it can grab hold of group 2 here, then we'll see it back up at the $5 mark up through here. The soybean market and most of the grains, the wheat and the corn and the coffee are all correcting, and we just really need to sit it out. I mean, this is the alternative count here with wave 3 up here and wave 4 back to here, but even the other count that we've got here is the same thing as well. It's just a different degree of structure, of a minor degree here. So we are looking for a corrective move back. We've got basically the arrival, and we're looking for the reaction, the bigger picture, and then we'll look for the first high above the level. So there's a long way to travel before we sort of get another buying opportunity, but we will be looking for buying opportunities if we get a clear A, B, and C here, and C in 5 ways. We'll be looking for buying opportunities once we can confirm that little upward move there. So not a lot cooking here, so we can move on. The wheat market is a little bit more developed in its correction. It's been correcting for quite some time, and we're looking for further move down into the medium level here, 650. So we're just allowing that to play out there, and not that far to go, but we need to see it finish, and then we need to see move to the upside there. So we're looking for 5 waves in this particular structure through here that's not quite finished just yet. And the corn's pretty much the same as well. Look, this is its high above the level here, so it's just sort of starting. It's kind of just behind the soybean market really. So there's a pretty strong relationship between the two. There's corn and soybeans in so many products. It's unless you look at the labels, it's hard to realise that that's the case. But it is in most products on shelves. So look, what I can see here is that we're going to be tracking through the correction lower through here. So we can consider this 5 waves down and 3 waves back up, and we'll consider another 5 waves down here. So it's in corrective mode. Look, you can short it if you want, put a stop above here, but it would all be pretty short-term stuff, down to the 490 or the 480. Still, it's good money. The coffee market here is just on the daily chart here. I'm not quite sure about the count, but and I've mentioned that before. But the main point is that we've seen the market come up to trading level 2, major trading level 2, and we're looking for some type of correction across here, and we're getting it. We're looking at this being a wave 5 here, and then an A and a B and a C. It doesn't really matter just yet. I want to see the completion of this situation here. We knew it would fold back into the 200 here as such here, and on the 15-minute chart. So don't worry about this market just yet. We're still waiting for a setup in this. It's still overbought at this high here, so we'll still need to see a more corrective move back. But the momentum in the bigger picture is to the upside, and we'll be tracking that. But we just don't have a setup here yet. The orange juice market is going according to plan. We've got positions all the way above the 50 here, all the way up, and we'll continue to add. And the interesting point here now is the group 2 here. And group 2 is 65, 72, and 80. This is a bigger 72 number here. It's the 172. It's not. It's sort of this is all minor group 2 here. It's not sub-level stuff. So we'll see a correction at this level in accordance with the power of 72. So we'll be looking for the top of the 5th wave of the 3rd wave here. We can see just in here that we've got this build up through here of waves 1 and 2, and this is the 3rd wave up through here. So the idea is to continue to add all the way up until the 72. So we'll be looking to take the money at 72, and then we'll just wait for 72 to be support. We can drill into that a little bit through here if you like. We'd been counting this up from this low down through here, up for the 1, back for the 2, then 1, 2 in blue, and the next degree smaller again is the 1 and 2, and then the 3, the 4, and the 5 up here. I'm not sure if that's the 5 or that's the 5, but we'll still consider this wave 4 at the 165 here, and then up for 5 here. So the main point here is that we want to get into group 2 here, because once we're into group 2, the market should lock in there and stay there, and that's the beautiful thing. And we'll be looking up to 172 area here to take profit, so you could even take part profit at 170 there if you've been building up, but definitely look for a bit of money. If you get a position on 165, then take part profit at 170. Okay, I want to bring sugar into the fold now, and this is just the daily chart here, and I'm considering this is same with the other commodities as well. It's been a long time coming, a low coming into place. I'm considering this being wave 1 up to here. It counts okay. I wish it was better, but it's not. So it could also be corrective as well in terms of an A and a B and a C wave up here. Down for 1, back for 2, down for 1, back for 2, and down for 3 here. So a strong move down is possible here, and it's not that we're doing anything at the moment anyway, but if this is wave 1 up here, then we've got an A and a B and a C pulling back to the 50, 61.8% here, and then we'll be counting this little structure down through here, which we can do now. So in that little structure moving down, we're counting it as 1, 2, 3, A, B, C for the 4th here, and then we're counting this down for 5 waves here. So down for 5 waves here would be down for 1, back for 2, down for 3, 4, and 5. So we're looking for it to end into that 50, 61.8 retracement level. If that's the case and we can see some movement up here to confirm that, then we'll be looking for a longer term long trade in this particular market. But don't jump the gun, because as I mentioned, there is a possibility that we could be heading into a very fast move to the downside here. And yes, you can short that down to the 1650 if you wanted to. There's still more downside to come from here. This is just on the 15-minute chart. So we got the A, the B, and the C for wave 4 here. Then we got down for 1, little ABC back for 2, and this is the third wave down here. So it'll probably bounce off 1672 area here, come back for a fourth, and go down to the 1650 medium level for the fifth wave, completing down there. So it's not acting like a big strong bear market here. It's got a third wave here, but it's not like this here. It's not like it's a big bear market. So anyway, look, let's just see how this falls into place, and we'll pick the thread up with this if there's going to be a long trade here later in the week. But anyway, it's all quite interesting. I think, you know, finishing this A wave, B wave, and then 5 waves down for the C wave here. And if that is correct, then we'll see it move up here, and we'll build the trade all the way through here, and we'll build it on all the way up to $20, and then on top of $20 as well. So it could be good. We'll see how we go. All right, cheers.